Hi guys.
Hi, it's Mitra.
My name is Vlad. I'm a realtor here in Toronto, Ontario. Today's conversation is about investing into real estate in the current real estate climate in 2019 in Toronto and the area. And we're going to cover those topics in detail. All of that is coming up. Four things that you guys need to be considering when you're looking at any investment properties. And those are important whether you're investing into commercial or residential real estate. Number one is appreciation of the property over time. This is the least predictable of all the four variables, and this is something nonetheless that you want to look at just to try and assess where you're going to be 3 to 5 to 10 years down the road. Can you predict that far in advance in terms of where the market is going to go? Absolutely not, but you can get an idea of a dynamic and see what's going on. So that's appreciation of the market. Number two is forced appreciation of the property. When you get into a property that is dilapidated and old, you would be well advised to try and fix it and get $2 for every dollar that you've spent. So in other words, you come into a property, you improve its condition, you can either then refinance or impact the value on a resale substantially. So forced appreciation is the second variable. Number three, very important, you want to be in the black all the time with your cash flow. So when you're assessing the potential cash flow of the property, you need to see that you're above water, right? So whatever expenses you have must be covered by the funds and income coming in from the renters. And lastly is extinguishing the mortgage portion of your mortgage, right? So the tenants are paying for the mortgage on your behalf. So over the course of 10 years, you need to assess how much mortgage they will pay off. And the balance, right, is going to be offsetting the gains that you will have accumulated over the time that you hold the property. So those are the four variables that you need to be very thoughtful about and considering every single time you're looking at the property as an investment.
Thank you, Vlad.
So when I'm thinking about investing in the residential real estate, what are the main property types that I need to be considering if I'm looking to maximize the return on the investment that I'm planning to put in, Mitra?
So depending on, of course, the financials of your potential buyer, then there are different choices. If you want to invest on a condo, which is going to be hassle-free, everything is usually taken care of by the property management, through the maintenance fee you pay. That could be bringing you a stream of income, one stream of income that if is located in a great location with natural appreciation, which could be a bonus, could be great for you. Number two would be a freehold single-family home. With freehold single-family home, definitely you have the opportunity to generate 2 or 3 streams of income, and also because you are going to pass on some of the costs of the utility, lawn care, or snow removal to the tenant, you literally generate more stream of income compared to a condo. And now knowing that also the value of freehold single-family home or semi-detached or townhomes dropped since 2017, then that could be an amazing opportunity to invest in freehold. Number three would be investing in multi-unit projects, then which is really bringing you multiple streams of income. And of course, having multiple streams of income is less risky. If the value of homes or your investment increases, it's going to be a bonus. If decreases, then you're protected.
You're still safe, yeah.
Because the streams of income is coming your way.
Okay, great.
We covered 3 types of investments that you can, of course, choose from. Today, we are going to cover only condos. What is important? What do we need to look at when we want to buy a condo, Vlad?
Okay, very good question. A lot of people think the condo is the easiest investment to go for because they're more affordable, it's self-managed by and large, and they are completely hands-off. So a few things that you need to consider when looking at condominiums specifically. Number one is the location. It's very important to be close to the existing public transportation hub, so people can walk to transit and or know that in the area that you're choosing, a new transportation link is going to be built or developed in the next few years. Also look for neighborhoods that are gentrifying, where things are changing, new blood is coming in, and you feel that the dynamic of the neighborhood is changing positively, which will undoubtedly affect appreciation. That's number one. Number two, look for smaller units. Look for something that is rentable. Don't go for 2 or 3 bedrooms necessarily as your first choice. Look for the smaller studio units plus 1 bedrooms. Those are the most rentable ones. And be very mindful of the price point. Don't be exceeding $1 million mark because it's going to be more difficult to get the mortgage. When you're purchasing it, it's definitely going to be more difficult to resell it at a higher profit margin than with cheaper units. So that's number two. And number three, look for a reputable builder, right? So when you're assessing a specific building to be built, you're thinking about investing into pre-construction, make sure that the builder that you're investing into, because you are investing into a builder to a degree, has a great name, has projects in the city that they've already built, that they're popular, and you can track appreciation of buildings erected by a specific builder over time and track those numbers, see how the builder has performed in the past, and if you find somebody who's done well in the last 20 to 30 years, that's the builder you can safely invest into right now as well.
Yes.
If I'm thinking about investing into a condo project, what neighborhood should I be looking in, and what are some of the projects that you know of that would potentially be a great investment?
There are so many great projects out there right now that we have so many choices to choose from. I know that 11 Yorkville is coming in September. The starting point per square foot is $1,650, and also it could be as low as 350 square feet suites that you can choose from. Also, I know that there is another project at Yonge and Eglinton, Great Golf, that is coming. Most likely it's going to be over $1,200 per square foot. That could be an amazing investment opportunity. However, there are some up-and-coming neighborhoods that there is not yet infrastructure for condo projects, big condo projects. Then it's definitely going to be an amazing investment because the value, the dollar per square foot is really going to be low, and it's going to grow within the next 5 to 10 years. And that is the area that absolutely I think would be great to invest. One is DuPont Street, the other one is Bluedale Village. Then we have Birchcliff, which is the beaches. We have Danforth East, and we have Jersey Street East, which is another Leslieville. And these are the projects, the neighborhoods that definitely worth to look into if you want to invest in condo projects.
Okay, great. Thanks for the information. There's a reason as to why we're specifically talking about condominiums. There are really two that I can think of. One, it's the easiest investment to get into for most people, not only in terms of affordability, but also in terms of the management and time investment, right, into the project itself. And number two, why it is very important is if you're working through a real estate agent that has connections with the builder, you can get access to what's called platinum pricing, which is pricing that is for a small group of people before it gets announced and released to the general public. So that's where you can get the biggest bang for your buck if you're looking into a project within your budget and you're also working through a real estate agent that has great connections with the builder as well. So wanted to mention that too, because that's an important consideration when you're buying a project and thinking that one of the biggest considerations for this investment is going to be over time appreciation, right? Yes. And the purchase price is absolutely key.
Yes, true.
So now that I'm ready to invest, I've selected a project, say, and I'm at a stage where I'm thinking about how do I get financing organized. Would you suggest that we go through banks, or would you suggest that we go through a mortgage broker?
I truly believe that there is a lot of value by going to a mortgage broker because, first of all, the mortgage broker is free. They're not going to charge you anything. They're going to do all your paperwork. They have access not only to one financial institutions, but to many. And if your case is really requires some creative options or a program that is not available within your bank, but in another financial institution, they would know and they would share it with you. And if you're self-employed and there are some tricky situation that they have to deal with, or you do have a portfolio of investment properties that your bank is not going to do anything about, then definitely a mortgage broker can come up with solutions for you. And more than anything else, the interest rate. They can always come up with an interest rate that would be much more beneficial to you than your own bank.
Okay, so it seems to be a clear recommendation to
Yes.
go with a mortgage broker. Okay, good. Guys, thank you for joining us again this week. We're going to be coming out with this type of information every single week. So if you like what we have to say, please consider subscribing. Ring the notification bell so as not to miss anything. If you have comments, please leave them in the comment section below. We want to improve our game and we deliver to you every single week. And you can also find us on social media. See you next week.
See ya.